And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report. We go through the markets one step at a time, top-down analysis style, looking at indexes, sectors, commodities, breaking down the news. We got some earnings roundup here today with Walmart and Home Depot, analyzing it all, giving you guys some insights so you can better run your daily routine. And welcome back to our show here on a Tuesday. Coach Emily joins us for her regular Tuesday appearance. It's great to have her. We're going to play another round of the Queen's Court a little bit later in the show. And from what I understand, we have an executioner here today that may be chopping heads. We'll have to wait and see what the Queen determines. I've got a little bit of inside knowledge, though, that I might have a pass today. There's a little anniversary, Emily, I had as well. But we're going to play that game a little bit later in the show.
Who gave you a pass?
I think Emily might.
She doesn't have the sword.
6 years ago, she walked into my office for a mentorship today. It's
good
a
for
date.
you guys.
We might get that. I don't know. We'll have to wait and see.
We gave him the power too early.
You about got your head cut off, and if you weren't the host of the show, it would have happened.
Chopped off right away. Yeah. We're gonna have some fun a little bit later in the show. It's always one of my favorite segments as well. So Emily, welcome. In fact, let's just get right into pleasantries. How are you doing today, Em?
I'm a little sad. My parents just left this morning. They're heading back home. So our little 7-week family time has come to an end, but it was really, really great having them here for the summer. We really enjoyed having them. But they're off to doing their thing back home.
Yeah, just in time for the kids getting ready to go back to school, I'm guessing. So
got to switch gears now and wear a different hat.
I gotcha. Matt, how you doing today, sir?
Doing good. Excited to be here with the team. I'm sorry your parents went back. Your other family welcomes you back, though.
I'm glad to be back.
That's right. Marky, what about you? How you doing?
Hey, listen, my count's down. Like many people might be in the red today, but my spirits are high. Once again, I'm a weird bull. Markets go down, I get excited. I just, because it always leads to opportunity in some form or another at some point.
Cash flow is the way that you've been approaching it. We'll talk a little bit about market conditions here in a minute. But before we get too far into market analysis and all that kind of stuff, I do want to promote the podcast that we had yesterday, Matt. We had a conversation with Jabon Wilson, episode number 438. We do it each and every week on the Trading Justice podcast. Sitting down with Jabon, an old friend, we've known him for years and years and years. Matt, you were on the road with Jabon for a long time, got a great relationship with him. Conversation was just fluid. I really enjoyed being a part of it, listening in to some of the insights he had about, teaching his son how to trade and his current approach to the markets. Just talk about that podcast a little bit, Matt, what people can get out of it.
Yeah, definitely check out the podcast for the latest market skyline general conversations that we always have. And then obviously, as Tim indicated, we brought on Jabon Wilson, a good friend of ours and a good friend of the podcast, to come on and just give us an update on all things Jabon, what he's been doing, the type of trading he does. He's really been enjoying applying it. And this is something I geek out on when you cross-platform, when you cross systems together. Mm-hmm. And, when he takes a system like the STEP system and he applies his technical skill set with credit spreads, I get fascinated how, the nuance of how somebody applies a trading system and what they have learned from that in terms of maximizing that system for themselves. And Jabon has found over years, has found wonderful ways of creative cash flow so that he actually reminds me a lot of Emily, in terms of, I'm going to create systems that allow me to live the life I want to live. And, he was a day trader back in the day, got a little sick of sitting in front of the computer screen for 6-7 hours a day, found a way that he could get the money he craves from the market while simultaneously running his other businesses, raising his family, and living his life. And I hope people get some takeaways from it, as I know I always do when I have a conversation with Jabon. So really enjoyed it.
Yeah, I did as well. And I dropped the link in the chat for everybody.
Don't know if I enjoyed Mark's Super Bowl pick, but
Hey. I haven't listened to this podcast, so we shall see about this.
Listen, if I had this sword on that podcast, heads would be rolling.
Hell to the Redskins.
They're not the Redskins
not.
any longer.
Well, they need a new fight song then.
You can't adopt a team when you don't even know their name.
You're ridiculous.
You're
Don't.
ridiculous.
Hell to the
Oh.
Washington football team.
Ay, ay, ay.
Emily, kick him off the bandwagon before
goodness.
everybody bust up their ACL.
He's
Let's
wanting
go.
to jump on it. I don't know if we're gonna let him in. He's
I
he's
like
still
bottom
wanting to get
feeding.
him.
What can I say?
Why not the Jaguars, bro? They had the first
Yeah.
pick of the draft. You could have done a lot. We had some fun
Nobody's
making
making
predictions.
the argument of Peloton over Apple, though.
No, no.
It's kind of
The
what I
Reds-
feel you did with don't you say it's the Washington football team.
All right. All right.
Goodness. you hit.
Listen to the podcast. We have some fun making predictions around the NFL. Mark obviously had a very deep cut pick from quite an interesting take. I thought so. Emily,
Yeah.
you'll have some fun digging into that one. If I'm a Redskins fan or a Washington football team fan,
Oh my goodness.
I'm kicking you off the
Yeah.
bandwagon immediately. And
Moving on.
I've gotten
you
that done
two.
like three. I've made that mistake 3 times, so we're moving
Listen,
on.
if we weren't already 2 minutes into this, I'd already say I'd break out my Stephen A. Smith impersonation.
Nah, no,
You two are banned from talking about the NFL. Let's
it's
roll.
a ban. It's a ban. All right, let's get into it. Markets are down here today. Had a couple of things happen in the last 24 hours. Chinese regulation came out, kind of made a little bit of a sell-off overnight in the Asian markets that spilled into the futures market. You can see that somewhat on the intraday chart. We've also been selling off since the beginning here, Matt. It's been, what a volatile day here. And you're even seeing this break below intraday levels. What's your read going into the day here today? What's going on here in the market?
Yeah, you had a little bit of a similar overnight session last night, more volatile. You can obviously see that on the chart here versus not the cash open, but the futures market open on Sunday. But you have a fairly similar overriding theme playing out every night, and that's what is the latest thing the Chinese regulators are going to say. And last night you see the market recover throughout the entire trading session, breaking out of intraday resistance levels multiple different times. We were talking on the halftime report right here yesterday, and I made the comment that we will probably be green by the end of the halftime report. We were kind of green by the end of the halftime report, and you saw that momentum continue to carry through the entire day. What happens up here to the top? You start to fade after the market close. Japan opens up, China opens up. You start to see a little bit of negative price action following some news that was released. And again, you have the overriding Chinese regulatory conversation that is happening. Obviously, it's been about a month now that we called China a complete stay away here on the halftime report. It's been a stay away ever since then. And the stay away commentary is in the short term as we all try to figure out what the Chinese regulators are trying to do. And where is the end of this storyline, or is this just the beginning point of this storyline? And that's very, very concerning right now. As an investor, as a trader, confidence in a position is very important. And when you don't have the confidence to carry a position throughout multiple different bank opens within a 24-hour period due to solely based on what somebody out of China might say, it that just gets a little confusing, and that gets a little, uneasy at times. And so, yeah, you saw that same thing happen last night. And, even, and I don't want to get into too much detail on it, but if you actually look at what they said last night, I doubt many Americans would have that much disagreement with what they said regarding Chinese tech and regulatory measures, talking about their version of Amazon, Apple, and Facebook, basically. And we're just now talking about JD.com, Alibaba, and those types of companies out of China. But what they're looking to do is make sure that they have fair practices among their tech giants. And so it's the same conversation we've been having in America for 10 consecutive years. China does it a little bit more aggressively. But if you actually look at what was said from the Chinese regulators, I doubt many people around the world would have that much concern. But the problem is this overriding dark cloud of how aggressive the Chinese regulators want to exactly, how far they want to go with this. And so last night was nothing like I had zero issue with what they said last night. I had zero issue with what they said regarding regulatory measures towards Alibaba and some of the other Chinese tech giants. But again, It's in this entire umbrella of what exactly is China doing. And again, is this the beginning or the end point of Chinese regulatory measures? And I think a lot of people think, well, China's doing something aggressive here. Let's see how it plays out. And it's just a stay away from until we see exactly how that plays out. Now, regarding the actual market itself here in the US, you see that spill over. Obviously, here is Japan, here is China, here is Europe, and here is America. And those are the bank opens. Sell, 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 sell on all of the cash opens throughout all 4 banking periods throughout the last 24 hours. That's concerning in the short term. Let's see how the market's going to navigate. Let's go back out to the daily chart. Let's see how the market's going to navigate some of these fairly important moving averages. You're testing the 20-period moving average here. If you do violate that, you're most likely violating 4,400, which is a significant whole number and in the zone of the previous 4420 breakout. You violate that, you're probably talking very similar retracements that you saw here in July and what you saw here in June. And so I don't think what happened in the last 24 hours changes the overall bias in the market. We have not violated a support level as of yet from a daily perspective, but it certainly is a little concerning. And I do think the confidence in this upward projection in the market is less today than it was obviously yesterday. But again, we have yet to violate a daily support level. Let's see that occur first. But you do have all the hallmark makings of something along the lines of this, something along the lines of that, and something along the lines of this, which over the last 3 months seems like we go through it once a month.
Yeah, it feels like that. In fact, I was just looking at your chart there, mid-May, mid-June, mid-July, we've had these little pullbacks in the market. Right now, we're down to the 20-period moving average on the S&P 500, testing some levels here on a one-day sell-off. And I read through that stuff out of China as well. I think the most important part of the takeaway, Matt, is China's been a stay away, like you said, for a month. And that's the end and be all of it for as of right now for me personally, and the way I'm approaching Chinese stocks and what's happening there. Mark, what is your
and again, I don't think China is a stay away forever.
No, just right now the sentiment's
like right
terrible.
now it's just and again it's like traders, investors, they want to project, and they project based on behavioral analysis, technical analysis, economic analysis, international trade agreements, and there's just some confusing policy that's coming out of China that just makes you ponder a little bit, wondering where are they going with this and where is the end of this? Because we started with education companies, right? That's what we kind of started with a month ago. Then we started talking about gaming companies and increasing regulation in gaming, and we've talked about increasing regulation in the financial space. And now today on the overnight action, we're talking about increasing regulation in the tech space. And so we've hit gamers, finance, we've hit tech out of regulation. And so it's just a matter of, okay, specifically what is China doing and how far do they want to push these regulatory measures against the number one producing country in the world? And so it's going to be interesting to see where that goes. And while we figure out where they are going with it, at least the best we can read the tea leaves with that, it's just a stay away from that perspective in terms of the buy side.
Yeah. Education, gaming, also Bitcoin got thrown in there. Remember a couple of months ago?
China will throw Bitcoin into anything. Like one day they're like, we hate it. The next day we're like, yeah, but we kind of see the value. Yeah, so they've done that, but that's not what's happening right now, though. The last month, they've seen increasing regulation in specific market sectors and not asset classes that everybody argues about.
Marky, what's your read on the markets right here? Obviously hitting the top right here in the short term, red candle today. Matt kind of just talked and gave the analysis on the news right now. What's your read on the market?
When I woke up this morning and saw the negative price action, I even said it, meet with my little trading lab on Discord for a few minutes in the market open. I was like, this is a crabby market, right? It had an excuse to stabilize yesterday, didn't do so. And when you saw the opening price action, it was like, this is just in the crabby mood. That's one day's price action, though. I always go back, and if you show me a weekly chart here, it is hard for me to get too concerned. Now I got all these macro worries and blah, 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 all of that. But, pullbacks and reversion to the mean on short-term moving averages on weekly chart. I mean, we see them all the time. When you look at this amazing trend, right? This has been an amazing trend. And in this amazing trend, even in 2021, how many times have we pulled back to the weekly? Like what, 8, 9 times?
Well, and Mark, you see this technically. You see that rising 9 on the weekly. You see that rising 20 on the weekly. You see the rising 50. Look how consistent these moving averages are from a weekly perspective. And then the daily, again, when you look at the daily, chop down to the 50, chop down to the 50, chop, break the 50, chop down to the 50. And so you look at those multiple times, and I mean, to answer the question, Mark, we've tested the 50-day moving average about 6 times this year so far. So you are looking about once a month here. When you look at the weekly chart, and again, we're looking at this just from a weekly perspective, those times it comes down into the 50, it's actually just testing the rising 9 with wicks underneath. It's not that concerning.
Mhm.
And because I'm not a short-term swing trader, so that, I mean, there's a different analysis. But I am a long-term investor, and I am a long-term position trader, and I look things from that perspective.
Mhm.
It's hard for me, even being the worry ward I am, that if I don't see a classic topping pattern, for me to get like super concerned, right? All I see is a day's volatility here, and when I look at the weekly chart, it smooths out that noise. And so, like, now if we were dealing with a classic topping pattern and this and that, I'd be like, oh, all right, I'm concerned there. That's not what this is, though. And then when you put it in the weekly perspective, it just, you're like, oh, it's a little, I mean, it's normal in this trend. Also, and we'll get into this later in the show, I'm sure. I continue to see defensive sectors hold their own. I continue to see defensive stocks. Like when I go to XLV, which has been something I've really hyper focused on. And Matt says this, and he said it again this morning. The anatomy of a bull market. Well, you say it, Matt, because you say it better than I do.
I say the anatomy of a bull market is one goes up and the other one takes a break.
And that is such a truism that you have to ingrain it in your head. And once again, I am a paranoid bull. And if I see a topping pattern on broad markets, you're going to get me to sing a different tune. We're not even close to that. What I do see, though, is I see the anatomy of a bull market constantly in motion. You've seen this with defensive stocks consistently over the last month. Whenever the market has had this scary day, right, where it's been down, defensive stocks, it's not like there's this market stocks. Seems very rotationally to me. Seems very defensive-y to me. And it's another sign that the market itself isn't spooked out. People take profit taking. Rips occur, people take profits, they rotate money in.
The market dinged an all-time high yesterday. Nobody's freaking out.
No.
Nobody's freaking out. This is a one-day downward movement that was driven primarily through Chinese regulators on the overnight action.
I mean, I didn't think, and so for me, it's about positioning in my portfolio. It's about rotating money into areas that maybe are showing some market resilience. Like I started criminally low a month ago in defensive stocks. And over the course, I've been trying to get some money over there, rotate out of some growth, high volatility stocks, get into those boring defensive stocks, just because you see it on the chart and you see it in the price action. So, yes, I understand. My account's down, your account's probably down, unless you are all in healthcare, which you shouldn't do, right? But it's just health. It's just healthy. It's just a healthy bull market, and this price action does not spook me in the slightest. Maybe it should, but it just doesn't.
Emily, let's get you in here. What are your thoughts on the market? The boys talking about what's going on price action wise, different sectors taking turns, 100% exactly what's been happening. What's your read on the market here?
If I can just take everything that Mark says, because Mark says this so eloquently when he explains about how he sees things, and especially looking at that weekly chart, because as cash flow traders, as position traders, the daily doesn't spook me either, right? But Mark really explains that and says that so well. So just take whatever Mark said, use my voice and put that, except for when I looked for the defensive area of the market, he went healthcare, I went staples. And last night on the lab, we were actually looking at some staple stocks, and we looked at Kroger, and Kroger had a nice little uptick today. just really nice. So, it's just a matter of going to find things that, don't make this so hard. Don't make it hard. You can literally just go in and find things, areas in the market that money is moving to, get defensive, because that's where things are leaning towards right now. When it's time to go bonkers on tech and everything else, we will. But for now, we just keep it simple.
Those
Well,
food companies been on
Washington
fire.
football team fans, we think alike, so I appreciate that.
Let it go, bro. Let it go. Let it die.
No.
All right. No, I'm with you though. The food company, have been on fire here recently. Kroger's obviously been a hot one. Albertsons recently took off. The staples were a good defensive area to start focusing on. So I like the thoughts here, guys. Matt, I do have one technical question on the S&P before we move past it though. Intraday, I'm looking at a level here about 44.15. If we do not hold here, and it looks like it may not hold, that's kind of some old resistance. New support was potential there, but we're in a free fall heading towards it. Are we looking at like 4,400 next level intraday wise? What do you see?
Yeah, I mean, you got some pretty important chop of 44.30, 44.20. That's some pretty important chop. 4.15. You've already violated intraday support level. I'm looking at 4,400 at this point as that next stopping point. You do got a little bit of technical analysis over here. You see the pivot point here at 43.96. You see it come down here, test 43.95 multiple times. But when you're dealing with this type of volatility here, like you're looking at not minor support levels. You're honestly looking at where is the support level on the daily chart that could stop this intraday nightmare happening. And I don't think it's a nightmare. That's just downward movement in price. But you're looking at that 20 period moving average. That's right in the 4,400 zone. You see the chop over here. So you're in the zone here, and that zone goes from anywhere from 43.80 to 44.20. But I'm looking, if you want to give it a number, I'm looking at 43.95 by 4,400 as the next intraday support level that could play a role.
Gotcha. Yeah, appreciate that. All right, let's keep flashing through the indexes if we can here. Obviously, the Dow and the S&P have been almost mirrors of each other. I'm still eagerly anticipating a tech breakout on the NASDAQ, and the Russell is now down towards the 200 again. They're going to make another test down there. Matt, what are you seeing from a relative strength weakness perspective? What stands out?
Well, what stands out to me and on the Dow Jones is, unlike the S&P, where you're kind of underneath some support levels, a little bit of a tricky pattern to kind of understand. Here on the Dow Jones, you're not seeing anything besides a Cody special here. This is a snapback test of resistance, old resistance acting as new support that coincides right there with the 20-day moving average. I'm looking at this. Yeah, big downward movement in price here in the industrial financial areas of the market, but those areas of the market just recently broke out. Once again, we're not seeing any violations of support. I like the Dow Jones here right at that 35,000 level. I don't think it's one of those things that absolutely needs to hold. But if it does hold, there's going to be some charts in the industrial areas of the market that really look good in a few days if these levels do hold. And so, like Mark says, he talks about it from an investor position trader perspective. A lot of times when I'm looking at these types of things, I'm looking at it from a swing trader perspective. And so when you're looking at this from a swing trader perspective, if you do hold here, you're talking about holding at a major support level. You pivot back up, you will be looking at this as a higher high, higher low scenario on a breakout. That's a pretty decent position to be in from a technical perspective. So nobody likes the volatility, but opportunity thrives in volatility. And so look at that from an opportunity perspective. And so when you're seeing the downward movement of price, again, we're only down 1.3%. And I know we haven't had to deal with a lot of down 1% days, but down 1% isn't that big of a deal here, especially when you're talking about a lot of that downward movement of price is due to Home Depot and the negative reaction to their earnings, and obviously the violation of the discretionary space, putting a lot of pressure on the broad markets. But outside of that, comms just kind of hanging out in the same technical pattern. Energy seeing a little bit of violation, but I'm not that concerned. You got real big support levels underneath these the current prices in energy, so not that concerning there. Staples just recently broke out, and like Emily said, look at Kroger yesterday. Found a good little pattern in their trading lab, and Kroger's just doing absolutely amazing things here today. The staples sector doing really good things from a longer term perspective as well. Utilities, when you're looking at utilities, this is simple. overextended, range up, look for a retracement. That's what's happening in utilities. Real estate, man, just consolidating within its exact same range. There's nothing to update here in real estate. Healthcare says, you know what, Chinese regulators, we don't care. We're going to continue to blast off. They saw the breakout yesterday. They continued it today. That's a space that is very, very attractive from a short-term perspective. We already talked a little bit about industrials. We talked a little bit about finance. But let me break this financial chart down just a little bit, because again, what's happening a little bit here is you have sectors like, like staples and healthcare that are doing very well. Utilities a little bit overextended, staples a little bit overextended, but really the only pain you're seeing is kind of discretionary and basic material based as of right now. It's not broadly based, but when you're looking at the financial sector, you're seeing the beginnings of what would be traditionally considered a bull flag pattern or a bullish retracement, depending on where the support level is stuck. But let me paint you a scenario here, team. You see the higher high, very consistent. Upward movement in price, slowing momentum, downward drift, coming into moving average. This is very consistent technically here. As the financial sector, which has really been the leader of the cyclical movement over the course of the last 2 weeks, as the financial sector starts drifting back down within the ranges of this 9 EMA and traditional bullish retracement 20 SMA, aren't you going to be a little interested here in this pullback?
I think you have to be. I mean, this was the first sector that took off out of the cyclicals after that jobs report a couple of weeks ago. It blasted out, put in a higher pivot high. It was kind of the first one to take another leg up. I like the sector. I like the space. I like the names in here that are developing as well. Berkshire Hathaway, Goldman Sachs, JP Morgan. These were companies that had really stellar earnings reports in the last quarter, Matt, as well. So for me personally, yes, I am absolutely interested in financials. And I'll be
then yesterday was only a 1 day pullback. Traditionally, flags are threes and over retracements are more than three. And so now you're looking at this from a retracement perspective instead of just one pick up the dip here. Technically, as this starts to play out a little bit, and again, you're seeing a downward movement in price here, and even in finance. But again, I see this just as overextended, technically profit-taking sessions. As this does start to find support, maybe it's tomorrow, maybe it's the next day. I do think tackle us. A lot of market participants will certainly be looking at the financial sector as we navigate that bullish retracement. The material space a little bit concerning with the volatility, similar to maybe not the violations that discretionary is having today, but again, underperforming the market, getting blasted. But once again, let me paint you a scenario here. Unlike discretionary, what would have to happen for you to get interested in discretionary right now? Open question to all of you.
I don't think probably Amazon would have to have a huge reversal off the 200 period moving average, which would take at least a month to develop that pattern after their earnings report has gapped it down into no man's land. So, or maybe
the most likely scenario is 3,200 gets blasted, and we're talking about Amazon at 3,000.
3,000, testing another long-term support. Yeah.
Okay, so that's what you would have to see. What about you, Em? What would you have to see for you to get interested in just specifically the discretionary space right now? And again, this is one of the only sectors we downgraded last week, and we downgraded from bullish into neutrality because the K-trade scenario here. So what's your take, Em? What would you have to see to get interested?
For me, it would be the top holdings on this ETF, which is Amazon and Home Depot, right, and Nike. It's all those those top holdings: Tesla, McDonald's, Starbucks, Lowe's. That's what has to move.
Okay, and yet Tesla is tied to the ARK Innovation Fund that has basically a lot of nasty headlines coming down the pike, with Michael Burry going to war with Cathie Wood, and yet Amazon is completely out of favor from the entire marketplace for outside of a month, for the better part of the last 9 months. Been out of favor against the marketplace, and Home Depot just got absolutely blasted on what could be defined as just as positively as a lukewarm earnings report, right? Not bad, not great, just lukewarm earnings report. And you can't do that in this earnings season. And then you look at the sector and you say, Well, if you give me a doji, nope, not interested. If you give me a W formation, not even interested. If you give me a further downward movement in price, circa Amazon to 3,000 and the discretionary space down to the 200-day moving average, similar to that, I'm interested, right? But let me come back to the financial sector. What would you need to be interested in the financial sector?
Slowing momentum and then a trigger.
I would need a doji.
Yeah.
That's the difference in the spaces right now. And so when we're looking at the broad market, yes, sometimes we can get a little bit of a misread because we're looking at that one big day and we're like, wow, it's kind of scary. But then when you break it down from a sector perspective and you understand what is happening in the discretionary space, it gives you a little bit more context to it. And so, yeah, from a sector perspective, I think this pullback is creating a little bit of opportunity in some of those cyclical areas, not the defensive areas. They've stabilized. They're stabilized. They're not drifting down. They're stabilization type analysis. But it could represent a little bit of a short-term opportunity as swing traders as these markets navigate. And again, financial, you're in the zone for a doji analysis, right? Give me a doji. In the industrial space, you're in the zone for doji analysis. Give me a doji. Those are interesting opportunities from a swing trader's perspective if we do see the slowing momentum in price, because once again, in these cyclical areas of the market, you're looking at finance being a leader right now, showing a recent breakout. You're seeing increasing momentum. Give you a doji. In the industrial space, you're seeing a recent breakout followed by a snapback retracement. Give me a doji. In the, let's go to the energy space, another cyclical market. Nope, not give me a doji. Give me that traditional W type retracement that we talked about with discretionary down here around the 200-day moving average. And then the last cyclical area of the market would be basic materials. And that, once again, is in the same degree of analysis that the industrial space is and the financial space is. Recent breakouts, give me a doji. And so I don't have a negative read on this downward movement in price. I do see it like Mark indicated. Mark talks long-term position trade. I talk a lot of short-term investor analysis, but I see the same thing as a short-term trader. You're seeing an opportunity at key levels of support. Those certainly could be violated. That's why we need a doji.
Man, I appreciate that thorough breakdown. Going through those sectors really does paint a different picture of these markets and gives you some context. So that was awesome. I loved it. And by the way, those cyclical areas that need to doji, need to doji, need to doji, it's kind of across the board there. I did want to get your read on tech, though. Do you still see this tech breakout potential is the same? Because we tipped our head above it yesterday, looking like we were going to run, Matty.
I got a question for every trader out there. Have we violated any support level in tech?
Nope.
Then the breakout's still alive. If you haven't violated a support level, the breakout's still there.
Gotcha.
Yeah. Now, I do need to see it achieve the high. Like that. Like the standards change a little bit. Like it's now not an order above 155 to just get in above 155. It's now we got more analysis. You have to update. You got this failed breakout at this point. You got to respect the failed breakout. You need confirmation here. That's what has changed. So going into the scenario, you had a clean scenario, clean breakouts equal clean orders. Orders above trigger in. You have a failed breakout at this point. We have a lack of trust on the overnight action with Chinese regulators. Give me a close, give me confirmation.
There you go. Gotcha. All right. Let's move into the commodity market next. And let's bring Mark in for the analysis here. And, Mark, obviously crude oil down at support. This is one of those every day I ask you for what your updated read on the chart is. And while we're in the box, it kind of is what it is, right? Walk me through crude oil, gold, the dollar, and Bitcoin. Tell me what you're seeing.
This is going to be a big one on crude oil as support. When you have negative and insert any stock, any sector, any area of commodity, when you got real negative headlines that tend to directly correlate with price movement on crude oil, which you do in COVID, right? New Zealand talking about locking down. We got COVID in China, COVID everywhere, right? COVID everywhere. And when you have those type of catalyst type headlines and you're at support, this is like a big time. And in my teachings right now, I'm talking about this with reopening, right? Whether it's Delta Airline or Carnival or Crude Oil, things that are affected by COVID headlines that are directly affected the consumption, the use of the product, whether it's sitting in a movie theater or driving your car. Lockdowns obviously curtail demand in these situations. And so when you're at support and you have these negative catalysts, I am fascinated by the battle here, because if it can hold support in the coming days and weeks, and then you get a 1-2 punch and maybe those headlines back off a little bit, right? Maybe you see declining COVID data and support holds during that vicious attack. It's very, very, very telling. Now, to front run anything at support here would have to have a crystal ball into the future. How's COVID going to play out in the next 2-3 weeks? How's price response going to play out? Are there external catalysts? Obviously that's a lot to risk. So there's not a trade here today, but it is definitely, whenever you have this situation, a support zone being tested, heavy downward, pressure potentially from catalyst, I got a close eye on watching it play out. So could be really, really interesting in the coming weeks. And obviously, if we break support, well, we got different technical analysis at that point, right? Because you look, where's the next support level? Got a rising 200 there. But, that's a few bucks down. And it would change the nature of the chart.
Can I ask you a question on crude? Crude's in the box analysis. I'm not changing the box, but you do have a little bit more increased pressure on support as of right now than you have in this latest run. And I even say it in comparison to this. Mm-hmm. Like, I wasn't too concerned about this because of where you started from. You started from 75, it held, it volatile, it stuck the landing. Nobody was shocked by that. You're in the box. Here, you pivoted right here on the 9 EMA. That's a bearish indicator, is what that is. You have a downward momentum. You now have a lower level of resistance coming into that violation. You could put that into the inverted cup and handle category. You could put that into the descending triangle category as you fight against that support level. I have zero interest in shorting crude under 65, by the way. Zero interest. Either. I also have zero interest in picking up crude at 65. Agree or disagree?
No, listen. The only exception.
Go ahead.
The only exception is if you get a multi-week pound 65 support level consolidation. That I agree. Ways off for me.
Okay, so what Mark's talking about is if over the next couple weeks we see stabilization, W-type formations, reversal galore, right? Mm-hmm. But I do have interest. So I have zero interest at the significant whole number of 65 from a bull or a bear perspective, personally. I do have interest if you violate 65 and we get a pivot point at 60, though.
Yes.
And so when I'm looking at crude here, to me, there's 3 potential buying opportunities that I would have to see. And Tim, how I'd love to project out.
Yeah.
Number 1 would be a W formation here, followed by a break back above 70. Mm-hmm. That's number 1. That takes minimum 3 weeks to form up, minimum.
It would probably line all those moving averages up as well if that happened.
It would. It would. They would drift down. They would reclaim up in the reversal. Absolutely. Number 2 would be just a complete recovery, high base, breakout of 75, and then we're ready to rock and roll. Agreed? Mm-hmm. Mm-hmm. Okay. Or number 3, the test of the 200-day moving average. And the one that interests me the most is the test of the 200-day moving average, if we do eventually get that. And it does look like, from a price action perspective in the short term, it does look like that's increasing probability of occurring. So just wanted to put it on people's radar more than anything. This level right here at 60 coincides with a heck of a lot of chop over here to the left. 65 could be violated here. Got a pretty significant backstop at 60. Just keep an eye on that.
Yeah, keep an eye on that support being tested, and obviously a couple of different scenarios that will play themselves out over the next several weeks to a month or so. And I think there could be
in any one of the 3 scenarios, you're still talking weeks.
Oh yeah, it's going to take time.
Yeah.
Yeah. Here's another
No,
product. It's going to take some time. Gold.
you know, and
Oh, go ahead.
obviously, like, I joke in my trading lab, like what I want for Christmas is a beautiful technical setup on reopening type COVID plays, coupled with declining COVID data to happen simultaneously. Listen,
By
it could
Christmas?
happen.
By Christmas? Do you want
You know?
Santa Claus to bring the presents to you?
I listen. A man can dream.
Christmas in September, maybe, bro.
Listen, the only thing with COVID that I know is if there's a case in New Zealand, they're going to shut it down.
They
That's
don't
the
mess around.
only thing I know. That is it. Anywhere else, COVID in America, COVID in Asia, COVID in Europe, let the experts handle that. They know more than I do.
And
But New
someone
Zealand
can
will shut it
criticize.
down.
Someone could criticize New Zealand all they want. All
I
I
wouldn't.
know
Not at
is
all.
while all of us were holed up in our houses last year, they were holding outdoor concerts.
Yes, they were. And for those of you who don't understand what I just said, New Zealand had one case in Auckland, one case of COVID, and they shut down the city for 7 days and the country down for 3 days due to one case of COVID.
Yeah, they lock it down fast. and
Nobody's rioting in the streets.
That's right. That's just the way they've approached it. It's what their approach has been.
And they're, although it did, maybe they're celebrating because it did stop the New Zealand interest rate from going on.
I didn't see that headline.
Oh, you didn't?
Central Bank.
Oh,
did they,
no.
did they cancel it?
They did.
They canceled the
They were
meeting.
anticipating a quarter-point interest rate increase. They have shelved that due to the one case of COVID.
No.
I'm not kidding.
That's funny.
They shelved the interest rate increase due to one case of COVID. I don't know. Maybe they got it right. I don't know. But
We'll see.
I found that funny.
That it was an interesting data point as well. I saw from the New Zealand headline, shut it down. They'll be back open in 7 days. Gold next here, Matt. You talked about crude oil taking some time to project out the next point of analysis as towards an entry point. I think gold's now back into that range you've been talking about between 1800, 1840, currently trading right at 1786. So just below it. It's clearly a bearish retracement, but it's also, there's context. You had the rapid sell-off. We've now battled it all back here. Neutral for me. What's your read on gold, Matt?
It's not neutral for me yet. I still got a little slightly bearish stance on it as it navigates this bearish retracement, and I certainly do think it has the ability to get back up above the pivot point and get back into that 1800, 1840 level, especially given the context from a week and a half ago that this was, I don't want to say purely, but it was heavily algorithm driven, and basically you've recovered the algorithm sell off from last week. But I still look at this as a bearish retracement because it is a bearish retracement. And so until that bearish retracement is snuffed out, until we get the bear stop out day, and the bear stop out day is above 1800 here. So any close above 1800 does shift you right back into neutrality.
Mm-hmm. Yeah, gotcha.
But it doesn't change the 1800, 1840 level. You're basically back into neutrality between 1800, 1840, and you're back into some degree of bullishness above 1840. But again, it takes time to get there.
It's going to take some time, especially if it's shot right up there. I mean, we're already coming back from 1680, after that, flash crash sell off. So that would be a straight line back.
But
up.
again, I see 90% of all of that is just robotic algorithms
kind of
that
congestion.
Literally, I honestly, and I'm not kidding, I tried to discount both the last 4 green bars and the 3 preceding red bars. I tried to discount that in my analysis.
Just kind of
You
lump it all
can't because the
together.
picture's there, right?
Sure.
But yeah.
Gotcha. All right. Bitcoin, the dollar, last two. Then we're going to get into some stock talk. Got a couple of earnings reports I do want to digest. And then we're going to play a round of Queen's Court here in just a few minutes. Bitcoin, actually, with the market selling, Bitcoin's down 1%, but we're kind of holding this high base, Matt. To me, it's lining up a real clear trigger above that pivot that it put in just a few days ago. And then you got to trade there. But what you're seeing here?
It's not what I'm seeing. Like, it's a high base. It's a doji within a high base. Who cares? It's what the context of what's happening. The market is spooked today, right? And they're spooked over what? China, right? And yet Bitcoin is just hanging out. I think that's a positive development, quite frankly. And maybe I'm just reading too much into it, But on a day where tech's down, calms down, things that are associated to Bitcoin are down, such as the ARK Innovation Fund. And yet Bitcoin's only down 1%.
It's holding. Yeah.
I think that does lead to confidence in position.
What about you, Mark? Does that, do
I
you agree
was
with Matt's analysis there?
recalling. Listen, I know, like ancient history is like 6 months ago. Remember, like we've seen this in Bitcoin before, preceding big runs. You know, if you recall, there's been times where the market's been spooked over the last, you know, in the calendar year, right? And we've seen sometimes during those times, Bitcoin, and we're talking broad market spook, you know, where not just healthcare and staples are doing good, where everything was down. So true market fear, you know, and you saw Bitcoin hold its own during those stretches. Yeah. And I remember us talking, I remember being on the show with you guys and I saying, you know, that's telling, right? That's telling. So we've seen this before where markets get spooked, end of the world, blah, blah, blah. And Bitcoin is like, eh. And that usually preceded something really, really, really nice.
If you were looking to sell Bitcoin, you had your reason yesterday. Or excuse me, on the overnight today. And you said, I don't care what China says. That's what the market said on Bitcoin today. The negative news came out. We don't care.
Didn't spill into Bitcoin at all.
No, what I love in these situations, because I've seen it happen, is on the Bitcoin proxies, like Coin, where like the market tech's down, and of course they get down, but Bitcoin doesn't do anything. I've seen Bitcoin proxies go down dramatically when Bitcoin was rising because the market was spooked. Please give me that support level.
I'm still interested. I don't care. Like, give me a doji, give me an upward movement in price.
Give me something at support.
It doesn't matter.
When I say that I get excited about down days, and I never get what I want eventually, but I'm like, just come on, 220, come down, give me an upward mobility. I'm in. I just please, right? Is it too much to ask?
220 destroys any swing trade, you selfish person.
He wants what he wants.
The battle between swing traders and position traders.
Battle. Marky wants the deep support.
Coin is the same company.
I can't have it violate 240. It would violate rules. No.
That's funny.
Support.
By the way, I'm looking at the coin chart and I see the gappy nature of it because it does proxy those Bitcoin trades. I mean, anybody who makes an argument against it being a proxy, I just don't see that in the correlation.
Is anybody making that argument?
I haven't heard it yet, but
please don't be the first.
Don't
be the first. Don't put it out there
Take it into the universe.
I'm
not going to make it.
All of a sudden, CNBC is running 2 articles tomorrow about how Coinbase isn't the proxy. Like, what are we doing?
If that happens,
do not put that out there.
In their own earnings, they talked about, listen, one of the reasons we could go up and down is because of the price of Bitcoin, right? You know, it's like,
I don't have, it's gappy, but it's a 24-hour instrument, Coinbase being a proxy to Bitcoin. I don't have it gappy as the same like ADRs internationally though. I see it gappy like the S&P 500 is gappy in terms of the spiders because it's a 24-hour instrument. When you look at Coinbase here, again, the intraday's ugly as all get out. You need to see it stabilize, but the daily, you're in the zone, right? You were in the zone here. You had an opportunity with confirmation. You never got it. You're now in the zone again. You don't know where the trigger point is because the intraday has to solidify itself, but it's in the zone where you are looking at it on a daily basis, looking to update intraday levels. But right now, I would give those to you if I knew them. I don't. I need a doji.
Needs some more price action intraday. Yeah. For sure.
Well, that's why we took off the set method from the scouting reports a year and a half ago. When you need a doji, you can't determine exactly where those intraday levels are to identify where to place stop losses and targets or entries yet. So it's in the zone, but I do like it here.
I like it a lot. I think you got to be interested in it. Very good. All right, last one here. The dollar don't need the chart on it, but you can bring it up. There's a couple things I do want to talk about though. Fed Chair Powell is speaking today. I did see Rosengren from the Fed was another person yesterday that came out and said that if we get good jobs data, Matt, we'll taper in September, or at least announce it or something. They're all kind of singing the same song and dance. A week ago on the podcast, you called that, and all this Fed speak the last 10 days has kind of confirmed it.
I believe, I need to check the tape on this one, but I do believe that I said the Fed was going to wait for one more unemployment report. And
Yeah.
I believe I did say that.
Yeah, and they've all kind of started to talk about that, kind of projecting towards the jobs data, talking about it, and then maybe later in September at their meeting, talking about tapering. So
I have nothing to say on the Fed until they actually taper because I already have the timeline.
let's see what Fed Chair Powell says today. Are you
Listen, he starts speaking, I believe, in 4 minutes. All I know is if I start getting slurry, it's because the drinking game got way out of hand. Like, you know, like.
I doubt
Wait
you'll
a
be
second.
listening.
Hold on. That's not that type of speech today.
Dude, transitory.
That's not
Take a
what
shot.
that is.
Yeah.
Nah, transitory. It'll be there a couple times, but nah, he's gonna be talking tapering a little bit.
I think I want to see what he has to say about the tapering process, if anything, and
Oh,
whatnot
then
in jobs data.
my drinking bingo card, then it's over.
Are you
for me
kidding
today,
me? Like,
you know?
like the entire month of speeches have already been written. They're just preparing for the announcement. That is the
Kim, can you
only
pick
thing
up
that
my
is
kids from
happening
school
right
today?
now.
Yes. Yes, that's what's happening right now.
Oh my goodness.
Absolutely. And Mark, I'll pick up your kids from school any day, actually. You know how it is. But the dollar here, obviously, we also had some economic data. Retail sales also fell in the month, Matt. I've seen this a couple of times in the last few weeks, by the way, and you and I have had internal conversations about it. The consumer right now is not happy as is, but it's not actually driving prices in the marketplace either. But I did see a weak retail sales report, weak consumer sentiment report last week. The dollar here, I don't know what else to say about it, Matt. Do you got any analysis on the chart? Or
They're
any
not happy,
anticipation?
but they're not happy not because they don't have money. It's because they don't have enough money.
It's the inflation problem.
That's the inflationary problem, and it causes a little bit of confusion for most American families who don't understand how these detailed economic situations play out. But I don't necessarily have a market concern because consumers aren't happy at inflation. I would have a market concern if consumers weren't happy over lack of jobs or the economy's failing. Like inflation still means they spend all their money. They just don't have enough of it.
Mm-hmm. Yeah, even the report today did not move price in the
I
S&P
know
that
only a
much.
few market geeks will appreciate this, but you know how like financial media always likes to attribute causality. You know, yields went up after the retail report, which was bad, which, you know, Market Watch didn't even try. They just said yields up after data. They're like, this don't make any sense on anything we can even guess on. So here's the facts. I thought it was cute.
Again, Market Watch needs traders to write headlines.
That's right. That's right. They could all use a few of them.
Yep.
All right. Let's move out of market analysis. Let's get into stock talk. We got to do it. We got to get into some of these earnings reports, Matt, that came out over the last 24 hours. A couple of big names in consumption, actually. Home Depot and Walmart, two of the biggest retailers in the marketplace. What do we learn from these reports? Let's start with Walmart here.
Yeah, let's start with the juggernaut that is Walmart. And, you know, every time, and I've seen a Walmart report probably 60 times. And every time I just always, even though you know they're going to print money, you just, we geek out so much about these tech giants and their money they make. And then Walmart just slowly just reports they just made $14,000 trillion in a quarter, right? But that's Walmart here. It's just, it's a little unfair, quite frankly. Walmart goes from 57 cents last quarter. They come in at $1.78 this quarter. If it was a tech stock, it would be up 48% today. Walmart comes in with a very impressive $141 billion versus the expectation of 136. So a nice beat on revenue. EPS numbers came in fairly hot as well against the expectation. The expectation was 156. It came in at 178. Both beat and a beat, which again, this earnings season, it's got to start there, right? I mean, these numbers this earnings season have been very impressive. And so you got to start with beat and a beat. Walmart does that. They affirmed their quarterly guidance. They affirmed the quarterly guidance from an EPS perspective. But what they did is they they increased their yearly EPS guidance. And so you officially have a beat, and not even a cheat. This is official raising of guidance from a yearly perspective. There is absolutely no concern in the underlying fundamentals of this earnings report out of Walmart.
141 billion in revenue is what I read, Matt. Obviously, when you have a beat and you talk about guidance moving forward with the revenue numbers they're talking about, that's a jaw-dropping number to me, like you said. And what are they projecting for the full year? Near 600 billion in total revenue for Walmart. It's incredible. It really, truly is incredible.
They're projecting more revenue than their market cap. It's insane.
Yeah.
Think about that. Like, what is their market cap right now?
Oh, that's a great question. I bet it's around 400 billion. Let me double check.
Like specifically
421.
They're projecting 600 billion in revenue. Their market cap is 421 billion. Apple's projecting about 240 billion in revenue, and they're a $2 trillion company.
Yeah. Mark,
and like Walmart's just an amazing juggernaut.
Yeah, got it. Anything else you want to add on Walmart here? Technical response, stuff that we can do with it?
No. Technically, on Walmart with gaps, Walmart's not a swing trading company. That you're not looking at picking up Walmart over the next week to trade the momentum. It's a stable company that people invest in long term.
Very good. All right. Next, then, now obviously Walmart holding some recent gains up near the high. Home Depot actually gapped down. You talked about it recently.
Before we do move on to Home Depot, the one thing that you want to keep a track on Walmart is how it does navigate this upward drift. Watch the 9 EMA catch up to it. Look at it as it coincides the battle against this pivot point. It is an all-time high. You certainly could see something develop over the next couple weeks as we start to look at perhaps a breakout against an all-time high on Walmart. That is something to keep an eye on from a position or an investor perspective. But again, that's a couple weeks as we're a little bit overextended going into that breakout. You need to see a little bit of retracement, a little bit of a high base before that. But again, great company, great earnings report, fighting against an all-time high breakout, just slightly overextended after the earnings release.
Gotcha. Very good. Let's
move on to Home Depot. And Home Depot came out and they were expected to come in at 443. They came in at 453. So slight beat on EPS, but again, slight beat on EPS. Depending on what analyst you were projecting, it could have been a miss, could have been a beat. I do officially have it as a slight beat. Revenue came in at 41.1 versus expectation of 40.4. Revenue came in at a slight beat as well, representing an 8% increase. Do not provide guidance, gap down. I did not read the commentary on this, from the actual conference call. I just read the raw numbers. Market sells off, out of favor. The space is out of favor as well right now. This is a stay away in the short term.
Absolutely. I mean, the whole technicals are blown up at this point after a gap like that. The best you could hope for is stabilization around this 319 mark where that 50 period moving average is. There's some old support there, but even mapping that out in the future, which is an exercise you always do as well, that's going to take quite a bit of time. It's going to take quite a bit of time.
I have zero interest on the 50-day moving average here. There's not a lot of evidence that the 50-day moving average plays that big of a role here. There's a couple data points, but that's about it. But even if it does stabilize at 320, what are you going to project? At 330?
No, there's nothing there.
And then there's 323 you got to worry about, 326 you got to worry about. You got downward moving averages you got to worry about. There's nothing here.
First time in 7 quarters they missed their same store sales numbers. I know that put a little bit of drag on their sentiment as well. Yeah. All right.
Let's move on to C Limited here. C Limited comes out at a negative 83 cents versus expectation of 56. Revenue did beat officially at 2.3 billion versus the 1.9 billion. Revenue did explode 158% year over year. Fighting against a little bit of a breakout potential here in C Limited. Look at this on a weekly chart. You see the recent breakout of 300, really kind of fighting to maintain that $300 support level. Do you guys have any interest post earnings. This was not a great earnings report, guys. Better price response than the actual earnings numbers. A little bit volatile over the course of the last few trading sessions here. Choppy above 310. If it was a little cleaner, I might be a little bit more interested. But let me throw it to you guys. Do you have any interest in C Limited from a trading perspective?
I'll go first. I do. I don't think this is Mark's kind of stock. I mean, Mark, do you have any interest here?
No,
It's not your kind of company. I'll tell you why, Matt. Number one, you know how much I like this stock in just terms of growth ideas and where it's heading over the future. It's interesting because the report's not good. When you read the headline number, they miss bigger than expected, lose 83 cents per share. Yeah, revenue came in above expectations. There were some stories there that were gobbled up, I guess, from the people who love C Limited. Quarterly active users rose 45% on the year. Bookings were up internally on the year, things like that. So engagement in their ecosystem and their gaming was actually high. The other thing I like about it is after a negative EPS miss, we still have the price response pushing a high base breakout. To me, that tells you what the sentiment is behind the people who trade this stock, number one. And we're talking about a sector in the industry in gaming where everything's out of favor, but C Limited, it feels like, well, everything out of favor in gaming, but this one, it's bucking that trend. I like that personally.
A couple things. Yeah, I do like that trend too. I would like to see how much business C Limited does. And again, I don't know. This is just an open question I have, and we'll dive into it later on today, Tim, because I am interested. How much business Activision, EA, Take-Two versus C Limited do within Asia?
That's a great question.
And within China.
As a percentage of their bookings.
Yes,
yeah, that's a great question.
Because C Limited is a Singapore company, not a Chinese company, right? So I'd like to, and again, open question, but I'd like to know that. That may have an impact. But also, when you look at the revenue over the course of just this quarter, okay, you're looking at EA that saw a 6.3% increase year over year, right? You saw, I believe Activision was around 20%, like 19% revenue increase, if I remember right. And then C Limited comes in at a whopping 158% increase in revenue year over year. Now, the context that was provided on Activision and EA on that was they were already fairly good during the pandemic, right? Well, C Limited sees an explosion in revenue growth year over year. I do think that is interesting from a growth perspective, right? And I do think that it would do us some justice to do some comparison analysis on C Limited versus the other gaming companies.
Yeah, this one deserves a deeper look into what's going on here because you're right. I think it's a fascinating company in many regards. Where it is that the games they have become very, very popular for MMO players. Those types, they've got a lot of engagement. The revenue story is there. They're still losing money, so this is definitely in the growth category. No question about it.
It's definitely a growth company. Absolutely.
Yeah, I'm interested, Matt, for sure.
I am too. Even with the miss on EPS, that revenue exploding, and it was just very, very impressive. And then obviously you are absolutely accurate. It's bucking the trend against the other gaming companies right now. And so I have some open questions on the why. A lot of times people say, don't ask why, just act. I'm the guy that likes the why.
I think why is important.
I like the why.
Yeah.
Why is C Limited performing so much better than Activision? I'd like to understand that. So maybe on Thursday I'll have a little bit more deeper dive on the gamers from a fundamental perspective.
Love it.
Yeah.
All right.
And then last, certainly least today, but only today, I'm still interested, is Roblox. We talked coming into the week that second earnings report on some of these IPO companies can be an opportunity. You start to get those longer term moving averages into the marketplace. As you can see, you have the 50-day moving average, you have the 20, you have the 9, obviously. Earnings here today came in at a negative. Roblox came in at negative 25 cents versus the expectation of 27 cents on Roblox. You saw the gap down on the miss. Really fighting that support level at 75. Mark, another gamer company right here, Roblox, obviously recent IPO, testing the old breakout channel here. You see the old breakout channel really between 75 and 77. You see that same support level start to build on the right side of the chart between 75 and 77. Mark, as the company shows a little weakness towards support, at what point do you start getting interested in a company like Roblox? Growth company, IPO, that type of analysis.
When I'm dealing with this type of company, I'm not talking a video game company. I'm talking about a speculative, interesting, like SoFi, like 23andMe, companies that like, listen, I don't have the greatest track record of earnings. I look at some key things, and then let's share some stats from today's earnings. I want to see from just a common sense perspective, because a thesis behind Roblox is very simple. It's like, listen, the great platform is going to continue to grow. Kids are going to continue to use it, and so I look at user data. And there were some interesting things. Average daily active users jumped 29% to 43.2 million, and hours engaged on the platform up 13% to 9.7 billion hours. The collective kids spent 9.7 billion hours.
I think half of those belong to my children.
I'm questioning my own parental skill set right now. As I go upstairs, and I guarantee my daughter is probably
we ain't ever going to colonize Mars.
They actually asked me if I wanted to join and play, and I refused. And they go, "Well, we'll see you in a few months," because that's the same thing I did with Among Us when I refused to play, and then I joined in later.
Oh, are you kidding me?
Gone. So
one of those daily users is me on a free account because I have some cat with a house somewhere. I don't even know what it is, but it's tough for me. I mean, when I see a company, and again, I'm interested, but it's a challenging environment for Roblox, and I see a company that shows a loss of 25 cents versus the expectation of a positive 27 cents.
I got another
supposed
couple
to show a
numbers.
profit. Revenue missed dramatically here as well. Go ahead, Mark.
I mean, daily average users, because you have international growth too. Daily average users grew 42% outside U.S. and Canada, and grew 46% among those over the age of 13. Engagement
I'm one of those.
27%.
I have a free account somewhere. I don't. Yeah, I don't. My daughter set me up an account one time. That's all I know.
And so when you look at big picture stuff, I saw the things I wanted to say, and now it's a question of how do you want to play it, right? Like you didn't see anything that scared you. Let's just put it that way, and some encouraging things. But
I saw things that scare me. A negative 25 cents EPS versus a 27 cent expectation. That's a little nervous. Revenue coming in at 454 million versus the expectation. I believe that was like 680 to 90 million. And so big time misses. And again, you have to beat on this earnings season when you're talking about the number one or number two best earnings season in the history of the U.S. markets. You got to perform. You got to perform. And Roblox didn't perform here. Technically, you're finding support, but that's the only positive I can give from an actual.
That's not much of a support level to bet on either, right?
It's not. And so I think it needs more time.
Yeah, I mean, it's one of those companies that I didn't go out and do anything today. I haven't talked about Roblox in my team for weeks and weeks and weeks and weeks and weeks. Eventually something, I keep it on the radar because I find it a very, very interesting company.
I agree. It is interesting. I think it needed more juice to get me interested from this report personally.
It did, and it had an opportunity with a positive report to get above 85 and break through this trend line. Technically, that's a little challenging for Roblox.
We need kids. We need you to spend 10.7 billion hours. Not 9.7, not good enough anymore. 10.7 billion hours. Can you do
Americans, we need more kids to pump up Roblox revenue. Come on, do your job.
There you go. All right, guys.
What is this baby boom?
Get these kids out there doing something for sure. Average users over the age of 13, but for the first time for Roblox, Mark, I did notice that data point as well. Maybe these kids are just getting older and they're still playing that same game, but some interesting data in there. But for me, it needed more juice. That's my take on it.
Me too.
All right, let's move into our last segment here today, and we're going to play a little game called the Queen's Court, where Coach Emily Mururi, who's always here on a Tuesday to help us break down these markets, she gets to analyze the picks from the coaches. Coach Mark and myself, we're going to submit analysis and a pick for the Queen to see if she likes it as an investment or a trade. If she does, we get to live for another week, and if we do not, the executioner, I believe, has a sword, and we get our head chopped off for that week as well. It's a fun segment. Emily, you're up.
Well, for the record today, I am not chopping Tim's head off. However, I do have an executioner. So whatever he chooses to do, It is not on
Matt
me.
is so
I am
happy
not-
right now.
I will give the analysis.
For the
but
record.
I am not chopping
For the
Tim's head
record.
off today.
I have a sword, and Tim better bring the heat.
Uh-huh.
And I'll explain why Tim's head's not getting chopped by me today later after we're done with
Listen,
the Queen's Court.
Y'all can geek out on anniversaries all you want.
Just
I
be
will
careful
chop
over
heads
there.
off.
Be careful over there, execution.
Don't
That's all
cut
I'm
yourself.
asking.
Listen,
Yeah,
Don't
we don't
cut
need
yourself.
a 911 call in the halftime report for the first time in history.
Yeah, we do not need to make epic YouTube fail history.
Listen,
Oh, man.
all I'm saying,
That will get our likes up,
Yes.
though. I
Listen,
mean,
I have a sword, and I will use my sword.
All I
Okay.
know is that we're always looking for more hits. Like, you know, you cut off a limb on YouTube
I
Live.
get a
I
whole
think
lot more
Guarantee
likes.
we're going to get shared in demographics we haven't got.
I
shared
think
before.
everybody is worried about me cutting myself right now.
We are.
yeah.
We're terrified now. We're like,
I have a sword.
Uh,
I am a grown ass adult. I have a sword. I am not going to cut my. Oh, I think I did just
Wait,
cut my-
Tim, is your pick
I
CMG? Because
kid.
that's definitely going to happen.
CMG is not my pick, though.
Hey, somebody
Trigger
say
Matt while he's holding
CMG.
the
Somebody say CMG. Somebody
they
say.
win.
Oh
Say
yeah,
when.
I'll go Doc Holiday on you guys.
Great
Oh,
movie,
yeah.
one of my favorites. Go ahead. Who's up first? Me?
You go first. Yep,
Sure.
you have the honor. You got the floor.
I would be graciously, appreciative of the opportunity to go first, my queen, and give you some analysis here. We're going to go into the materials sector, specifically chemicals, and we're going to pick up a play. I see this thing in a couple of different interesting ways. And give me a Trox, Matt, if you can, TROX. I was hanging out with some of my trading coaches there at Tackle Trading this morning. We're having a conversation about the markets, what we're looking at, and all that kind of stuff. This stock came up, grabbed my attention. I started mapping it out. I like this for a couple of different reasons, and I'm glad that you did start with the weekly chart here, Matt. We've got a support level that is forming here over the course of the last 7, 8, 9 months. We had a beautiful trend throughout the entirety of the first half of the year. We gave that back. It's now had a deeper retracement for a couple of months on the weekly chart, and we're trying to find support around this 16, 17 zone, which also corresponds with the rising 50-period moving average, which is a nice longer-term level for investors. And on the daily, it's right next to the 200-period moving average. And if we can come back down to the daily chart for just 1 second there as well, a couple things that you're going to see on this daily chart that I like. And as we map this out, I'm also going to talk a little bit about valuation, their fundamentals, and the sector here in just a minute. It was in a downtrend. Pivot analysis, you can see it in the moving averages. Keep it simple. They rolled over. We failed on the high base breakout back there in May. It went into a downtrend. And this is what can happen when you need to take some time to develop new opportunities, right? Lower low, lower high, lower low, lower high, but then equal low right at the 200. You'll notice it from July through the earnings report. We've really, really stabilized around the 17 mark, right on that green line. It now has moved into a compression pattern for me. And there's several things I like about this one technically in the short term. Go down to an intraday chart on the hourly. And I wrote down a couple of different ways you could trigger on this one, Emily, if you're looking for upward price appreciation to get you into some kind of swing trade. Right above that 19 mark. This is a swing trade. Yes, this is a swing trade. Right above that 19 mark, I think that is the trigger I would take. Okay, it's an aggressive trigger. There is some noise back at 1950 that you could decide that, okay, I need to get through that. I personally don't think so. Those are wicks back around the earnings report. You'll notice the time and the period that it was in at that time. It was right on that earnings report cycle. I'm more focused on this 19 level, which is developed over the last 4 different bars on the daily. You can see it right on the intraday as well. That's number one. Number two, I really like stop loss placement. Now, for me personally, I think this can be one of those swing into position trades if you want to trail stop and have that work that way. Mentally, that's the way I would personally play it. Use a stop loss. Let the pattern develop on a trigger, let it start working up towards T1 and keep my stop loss placement in place. I like a stop below this entire zone if you're longer term thinking, around $17, so below that. But really, if you're going to go swing trade, I think you can come in here intraday and go underneath 18 bucks. You're playing this as an intraday breakout with confirmation. You then come into the intraday level to keep your risk around $1. Okay, you'll see the pivot point from yesterday, also last Thursday, right at that $18 level. Back to the daily chart for just 1 second, if we can. T1, T2, I think you've got several choices in here. Around the 50 period moving average, which is just above $20, is going to put you around a 1-to-1, depending on exactly how you map out stop and trigger. So that's tight. But what I really love playing this as is actually trend developer, where at T1, you could do something. You could convert it into a cover call. You could convert it into a spread, or even simpler, if you just stay in equity, you could just trail stop up. Okay. Trail stop up, approach it that way. Because if we can get through the 50, you got clear sailing all the way up to 22, which is where that next noise is, 22.5. I like this setup where it is. I like the technical compression where it is. And it's one of these stocks in materials that is down right at this location where it's primed to go. Couple things on fundamentals, which if you do truly approach it as swing trade, aren't going to make an impact. I get that. I just want to make a note. P ratio of 2.6. Forward P ratio at 7, very, very low valuation. It's not swing trade analysis. I know the executioner's already shaking his head at me.
You're already dead.
All right, then if that's the case, I do still want to firmly submit. Trox is a nice
You can't
build out trade.
Analysis on a swing trade to try to make it look better.
My queen, this is my pick.
Thank you very much, Tim. I will give you my I'll give you my thoughts once Mark goes.
That looks like a home run hitter at the plate.
Is he gonna tap his feet?
Hit me on Babe Ruth in 1917. I already called my
like
shot.
he has that look, like look zoned in at the ball, ready to take the swing.
I know the pitch that's coming. It's a heater down the middle. Like he's gonna give me a fat pitch. I'm gonna hit it.
Yeah, that's right. Jonathan has a very good point. There's a lesson from Matt. If you can't be or beat the queen, then work for her. And I actually, not a bad call.
What do you think's happening here?
That's funny. All right. So Trox, and by the way, I do like chemicals in general right now. Obviously, there's some good chart setups in that space, and it's been hot. And I like where materials are in terms of having that discretionary type area, the cyclical area of the market. If we can get a doji in materials on that chart, could help us. Some of these charts and Trox actually outperforming the material space here today. Emily, that's my pick. And that's my analysis. Yeah.
Thank you, Tim. Appreciate it very much. Mark.
High conviction, long-term investment ideas, what I'm bringing you, my queen. And I like it when technicals, I like it when fundamentals on a reversal story line up. I think I have one here in Gilead Sciences, GILD. Let's talk big picture first. I want exposure to defensive areas in the market. Is criminally under positioned in healthcare and defensive areas over the last month, and a lot of the picks I've brought you over the last month have been very defensive in nature, recognizing the price action, whether consumer staples or somewhere in the area. Healthcare is an area that stands out big time to me. Late last week, this week, the chart's been there. I think there's plenty of evidence that if not rotation to defensive areas of the market, strong movement into that area, stabilization, if nothing else, which on days like today, you don't mind. So top-down analysis that guides me where I want to go. Where I'm light on portfolio guides me, and I don't know your healthcare holdings right now, but so it makes me look in the healthcare. And I spent a lot of time last night on Gilead Sciences. Now, Gilead's a company that I have followed over the years because it has a tendency to have these long-range consolidation patterns, creating cash flow opportunities, bouncing back and forth between support and resistance. Now, last year, Gilead Science, you probably recognize remdesivir, right? In the headlines, COVID is in the headlines in 2020. Remdesivir is the miracle drug. Remdesivir slides down out of favor, creating a lot of volatility. And as we know, selling can get selling. Gilead fell out of favor. Remdesivir, the thing about these big pharmaceutical companies is, when you break down, and this is something I did last night, there are numerous products. They're so insulated, and this applies to Pfizer or Merck. They have their top sellers, and Biktarvy is Gilead Science showing growth within that, but they have so many product lines. They have so many different drugs. They have so many different things along the way. In fact, Gilead Sciences has 16 new candidates in the pipeline that are in phase 3 or have already been submitted to approval. So they have a robust pipeline. They have a robust product line. And I really think remdesivir created some interesting price action in 2020. All right, let's get down to a couple really good things I like about Gilead Science, besides robust pipeline, diversification, healthcare, all of that good stuff. Let's talk dividend first of all. Healthy 4% dividend here. Healthy 4% dividend, a dividend that they have been increasing since 2015 every year. 4% dividend is kind of nice little sweet spot, right? It's not this ridiculous dividend where you're like, makes you like, 10%. Like, it's like, I don't trust that. Something's got to be wrong with that. And it's not like one of these 1% that doesn't get, that 3 to 4% on a dividend yield really starts to get my attention. And then when you look at the ability to sustain that dividend over time, I started diving into the fundamental metrics. Gilead has an outstanding price to free cash flow ratio relative to itself. This is a company that makes money. When you look at the earnings reports and just go back, this company makes money, this company makes money, this company makes money, this company makes money. And through buybacks, dividend, starting funneling some of that free cash flow back to the investors, creating that cash flow that we don't have to work on ourselves. So I got top down, I got fundamental metrics that point to valuation on this company. I got cash flow building on the dividends, right? So this checks a lot of boxes. Well, a lot of companies will sometimes. What gets me to bring Gilead today, as opposed to 3 weeks from now or 7 weeks now, is that you're breaking out of that 200 weekly. All right. So the technicals, which play such a huge role for me in the timing of trade management or entry decisions. Classic pattern on a reversal. You hit a bottom, you find support, you start to climb up, you go up, come back down, and then start that slow climb. You came up to the 200 weekly. Found resistance, found resistance, found resistance, all the while giving time for those weekly moving averages to work up, creating a pinch situation in the last few weeks. Pinch broke to the upside. After numerous tests of the 200 weekly, you break out. Got some room to run here. I like the valuation, like the cash flow, like the diversification of the company's price line, love the technical entries, forcing me to action. And so when I'm looking to get into defensive areas of the market where the market might be showing favor, well, then I start doing research, investigation. Where do I want to go? For me, I want to get into Gilead, not as a sell naked put. Let's go to the daily chart now, if you would. Not as a sell naked put. Let me get some conservative. I want to own these shares. The only question now is the specificity of the timing. And this can be tricky because this is where swing trading brain says, I missed the entry, right? I get that, right? Like this would have been same analysis 2 days ago, same analysis 3 days ago, same opportunity, same technical, same valuation, dividend yield would actually been a smidge higher. So now it's the specificity of the entry. A lot of ways you can go here, right? Like if I'm a swing trader, which I'm not on this. This is
you're looking at investing though, right?
Yeah, 100%
Then
investing.
we don't even need to discuss the timing of this. You broke out last week, you continued this week, you pick up the shares.
Yeah, so
this isn't swing trade analysis.
But I wanted to be, because all of us at Tackle Trading, even if we're not active swinger traders like we have a swing trading part of our brain, right? And you look, that might be a little overextended. I love the room it has to run. I love everything about this opportunity in an area of the market where I'm extremely light, healthcare, like this for directional. You want to do a little cash flow. I would actually advocate very low delta on this one. I think this is a long-term investment that carries with cash flow with it. And if you want to do a little cash flow up above low delta, you can apply whatever system you want here. I think this is a stock I feel very, very comfortable with. I present you Gilead Sciences.
Thank you, Mark. Oh man. Here's the thing, right? Like old me would have jumped at Trox and just gone directional and just bought calls and whatever and just directionally trade that. Love that. However, that idea of just rather than buying calls and just going crazy the way I used to and getting into this because of just where the price level is, getting into it using the equity and just buying the shares, eventually turning it into a long-term investment if I so choose. Really love the idea. Not an area of the market that I'm in. Basic materials don't have a lot of exposure there. I like that it's an inexpensive stock that I can do a few things with. Obviously, we do have to clear the 20 price range and actually break out of 19 there, but I like it. Gilead, on the other hand, with healthcare, if you look at XLB and healthcare, those two ETFs, healthcare looks so pretty. Give me XLB.
This is XLB.
No, give me basic materials.
Oh, XLB.
B for boy. Breakout, retracement. Breakout, retracement. Where do you go? Where do you go? I like Gilead, but I'm not chopping Tim's head off for bringing trucks. I'm not.
The executioner has things to say. Am I ready?
Go ahead.
present
I'm not. I know
my
you are
case?
itching. You are itching and dying to say something. Go
Yeah,
ahead, because Queen is not saying anything today.
Okay, Trox. Trox has some very interesting longer term analysis to it.
Mhm.
You know, you're testing the 200-day moving average. It's got the argument for Trox is a longer term argument. It is not a swing trade in any capacity. Is it a swing trade? It's reversal analysis, it's fundamental analysis, it's longer term, it's cash flow analysis, but it is not swing trading analysis. If you're looking at a swing trade in the specialty chemical space, let me just give you a list since we discussed these in detail on Friday. Lynn Holdings is the best swing trade of the bunch.
Mhm.
That is a breakout that showing a little bit of weakness towards the top of the chart, but we're talking about a breakout with momentum. You got retracements galore that just need doji analysis. IFF, LYB, better. In fact, the 200-day moving average swing low bounce off LYB is far better than Crocs from a slowing momentum perspective. When you're looking at ALB, just needs doji analysis. You got momentum in trend. You're talking about a pivot point on the 20-day moving average, needs a doji. When you're looking at AVTR, these are all specialty chemical companies. AVTR, you're looking at a breakout recently against a high base with momentum on the 9. When you're looking at AVNT, you're looking at a potential reversal with the breakout of 50, all better from a technical perspective, from a swing trading perspective. When you're looking at Trox, you're looking at a slowing momentum against a 200-day moving average bounce, and you cannot target above 20. It just cannot occur because of the downward moving 50 period moving average, as well as the old chop left of here, plus the significant whole number. Trox isn't a swing trade, and so he needs to get his head chopped off because it's not a swing trade. I don't know why you shifted. I don't. Like the whole morning you were looking at the fundamentals and all of a sudden you went swing trade.
Went to the short-term analysis, one-to-one.
What's the old analogy of oil and water? They don't mix.
That's right.
Well, Tim dumped some gasoline into the bowl and then lit it on fire. Like, no, it's not a swing trade. His head is absolutely chopped off. Absolutely.
Oh, goodness gracious. Well, Tim, your brother chopped your head off, but this is why I was not going to chop your head off no matter what you presented today. 6 years ago, I walked into your office with my dear friend Rosemary to do our mentorship on what we do now, right? And I was a completely different person there in terms of my style of trading. And I have evolved thanks to that, very, very serious conversation we had to have in your office because of how I was trading. And so for that today, I cannot chop your head off because I have seriously, literally changed, who I was in the beginning because of just how aggressive I was because of what I needed to, to get out of at that time versus now, I don't have that same pressure to, I guess, create that income that I needed back then. But still, if I had kept going that route, I would not be here trading today, 6 years in. So for that, I am not chopping your head off. And I'm very grateful that I came into your office that day. Matt really should be the one getting his head chopped off today because he was not available to mentor me during that time. So
as the sword, and your nostalgic personal moment doesn't change the fact that Trox isn't a swing trade.
I do appreciate the gratitude and the memory, kiddo. When you brought that up this morning, brought a big smile to my face, no question about it. But Matt's right. If this doesn't deserve getting passed, I don't care about the memory. I should be.
When you said swing, I was like, "What are you like? Give me
doing?"
If I deserve to get chopped, I deserve to get chopped. Emily, don't worry about that. But I do appreciate you reminding me of that memory. That was such a wonderful 3 days.
The system cried a tear today.
He loves his sword so much.
I can't believe it's off the long-term analysis. The valuation argument on Trox.
I think it's because I told him he wasn't going to get his head chopped off, and he just went, "Okay, forget it. I'm just going to go swing trade on this. She's not going to chop my head off."
No, that's not what happened. I went with my notes. That's what happened. I went with what I had down on the page and mixed the analysis on the time frames. Matt's probably right. There's a couple things there.
There's no problem.
All right. I still like the spot it's in, by the way, but probably
and
good
make
point.
A long-term fundamental argument.
I'm already chopped. What about Marky?
Mark's fine. Mark's
I spent 2.5 hours last night setting up my pick.
Go make an argument against Mark's analysis.
I can't. Good looking chart on the weekly too, Mark. Good
Healthcare's booming. Gilead
it's a check the box for me.
Channel reclaimed all moving averages on the long term. You got momentum in the short term. Yeah, is it overextended short term? Swing traders would like a pattern to develop. That wasn't his analysis. His analysis from a long term perspective.
Yeah, I mean, if it goes down $1 tomorrow because of fluctuations in the market, doesn't change anything that I just said.
Yeah, that 4% dividend is very enticing. I love that.
One final note on this, the one thing I've learned, and some of the biggest missed opportunities is I tried to get too greedy on a long-term investment entry. I was like, I'm going to wait for a pullback, or I'm going to wait for this, instead of being like, we're quibbling over $1 here. I can cash flow that $1 if I want, and sometimes I've missed out, like Kroger recently.
Well, and that's why I said, I mean, if you're short term, yes, the timing, you got to be assassin-like. Your timing is so important. Rules, 10% ATRs, above entries. I mean, everything is systematic. Longer term, do you like the zone? You're good.
Yeah.
And I really like the zone.
Yeah, investor analysis different. Yeah, for sure. All right. Fun as always, though, by the way. I don't mind. Let's, learn a lesson from it. Make sure I map out that argument a little bit better next time, Emily. And again, thank you for the memory. We're going to start wrapping up our show right now. Marky, programming notes or any final thoughts for the team out there?
Night got the G's, the G's, Gino and Greg tonight on the Coaches Show. I'm going to talk a little market psychology, right? Well, we talk about the X's and O's of trading all the time. Those psychological elements, inspired by Javon yesterday on the podcast, the topic, what holds you back? What makes you crazy? All of that good stuff. Gino and Greg tonight, Coaches Show,
absolutely
8:30 Eastern.
Emily, any final thoughts for the team out there?
Friday night, 8:30 p.m. Women in Trading.
WIT,
baby.
Very good. Yeah. We'll make sure that we talk about that throughout the week and, make sure everybody out there is aware of it. Maddie, final thoughts from you, sir.
Just check out the Train Justice podcast from yesterday. Love the interview, and obviously Coach's Show later on this evening. Got a full slate of tackle trading webinars and educational products for everybody this week as we all navigate the wonderful world of the financial markets together. And I enjoyed cutting Tim's head off today. It was well deserved.
The most important thing that happened,
literally, if you would have stayed with the longer term value,
I could have got through
argument. You would have got through because there's an argument. But
I
could have decided to go your own way.
Changed it and got floated. But the most important thing, though, Matt, you didn't cut your own hand off or something like that. We're not calling 911 right now, making YouTube history or anything
I did not
like
want
that.
my brother to be like generations from come. Epic fail.
Have you guys watched the show Arrested Development?
Yeah,
of course.
Okay, what's the boy's name? The Michael's like, what's his name in the show?
Oh, what is his name in the show? Quirky kid.
Yeah,
the
yeah,
young
yeah,
kid.
yeah,
yeah,
yeah.
I can't remember his character's name, but
Yeah, either kind. But do you remember the scene where he has the lightsaber and he's accidentally recording himself and it gets out?
Yes, yes.
That's me with the sword.
That's funny,
I
actually.
willed it like a Jedi.
Oh,
But I didn't cut myself today, so we're good.
We survived today. Next week's another week. We shall see.
Listen. If he brings
George Michael, how did I forget
makes his
that?
analysis again next week, I'll probably cut myself.
George Michael is his name in the
George
show.
Michael's his name. That's
That's
right.
a wonderful
All right, Tim, have a great